Good morning, hello and welcome. You're with us on Opening Bell. I'm Surabhi Upadhyay and we're coming to you live on the Money Control YouTube telecast. It's a Wednesday morning, bang in the middle of the week. And while the headlines in terms of geopolitics out of West Asia have been improving, the ones that are coming out from the tech space have been deteriorating. So in the last 24 hours, it's been all about a worldwide tech sell-off that accentuated on Wall Street, and we're going to talk about that. The global picture, the geopolitical picture, so that's Asia right now, and some of the markets are still reeling under the onslaught of what happened on Wall Street last night, and we'll get to it in a bit. The silver lining is that the geopolitical picture at least is better. So let's go back to that that hot board which was showing us the price of oil. That's the most comforting fact of trade as we start off, that oil is flowing through the strait. Ships have started their movement in a more meaningful way, and the price of oil continues to come down in a very steady fashion. So that's the best piece of news with which we are kickstarting trade this Wednesday morning. Before I get to the headlines, let's also talk about the latest coming in from the US president. Now, Mr. Trump has said yesterday, this is Tuesday, that his administration was trying to work out a fair deal with Iran and that US and Iran were getting along well. Hear him out.
But as you know, we just achieved a historic peace agreement with Iran to end the conflict in the Strait of Hormuz. And by the way, yesterday, 19 million barrels of oil flowed out of the Strait of Hormuz, a very beautiful place. We are ensuring one thing very importantly, because this is why I did it. I did it for this reason, 99% for this. Iran will never have a nuclear weapon, and they've agreed to that. So now we're trying to work out a deal that's fair, and we also want to work out a deal.
There you go. Man's looking quite happy. So like I said, geopolitics is not the worry this morning. It is really about that tech sell-off, and we're going to talk about that because Asia is still feeling the heat from the sort of sell-off that we saw on Wall Street. So let's get started. Here are the headlines. Tech-led rout picked up steam on Wall Street, dragging major indices lower. S&P 500 falls over 1%. The Nasdaq is down over 2%. The blue chip Dow Jones also closes in the red. Semiconductor stocks like Intel decline 6%. Qualcomm sheds 8%. Asian markets open mixed as technology stocks rebound after global equities posted steep losses in the previous session. Shares of Samsung and SK Hynix have been up in early trade. The Gift Nifty suggesting a flat start for Indian markets. Oil prices continue the downward trajectory. Brent extends losses to near 4-month lows on signs that more oil tankers are stranded in the Gulf since the start of the Iran war, and they're set to move out of the Strait of Hormuz now. Meanwhile, gold drops nearly 2% on stronger dollar, growing bets on Fed tightening. US and Iran offer conflicting statements on nuclear oversight as negotiators push a final deal forward within a 60-day window. US Secretary of State Marco Rubio says that Iran will not be able to charge tolls in the Strait of Hormuz when a final deal is agreed upon. Meanwhile, the US Senate backed legislation directing President Donald Trump to halt US military action against Iran gets underway. Heavy rains lash parts of Maharashtra as the southwest monsoon finally arrives in Mumbai 2 weeks after the usual onset. Agri Minister Shivraj Singh Chauhan, however, warns Kharif sowing may be impacted as 315 districts are likely to receive less rainfall. Okay, so just a little more detail on this tech rout that we're speaking of. That's been the biggest headline in the last 24 hours. So it's really trumped whatever's going on in the Strait of Hormuz. Now, we saw an over 2% drop on the Nasdaq yesterday. I just want to pick out a small glimpse of the way stocks were sliding. So look at the tech names there. Micron 13%, ARM 10%, Marvel 10%, Qualcomm almost 10%, Intel 8.5%. Nvidia was actually better than the rest of the lot, down only 4%. As you can see, the bulk of the sell-off was concentrated in the chip space. Now, what are the reasons? Why has US tech started faltering? Now, you can ascribe a bunch of reasons. Elevated valuations, the fact that the market is already quite nervous and it just needs a small hint or a small whisper to trigger the exit, to trigger the sell down. Yesterday, there were some, whispers about chip pricing, whether, eventually prices are going to head lower, whether companies are looking for cheaper alternatives, cheaper models, AI models themselves. That perhaps triggered a bit of the selling, and obviously the big fear around US interest rates. Now, speaking of interest rates, I want to talk about what's happened in the money markets. The dollar has continued to strengthen. The dollar index is very much above 101 this morning as well, in fact 101.4. If you talk about US yields, they remain fairly elevated. We've got the US 10-year very close to the 4.5% handle. And the worry is really about what happens to the direction of interest rates. The market is still baking in the chance of at least one rate hike this year. And that's why the inflation data that's going to come out later this week, actually it's going to come out on Thursday, that's tomorrow itself. That's going to be extremely critical as we go forward. The PCE data that will be out. In addition, this morning, there's a wobble across Asian markets. The South Korean market has another blow coming its way in the form of MSCI. MSCI, the global index provider, has decided not to upgrade the South Korean market to a developed market status. Why is that important for India? It's also important for India because if South Korea was upgraded and it was no longer an emerging market, then when emerging market funds are allocating money, the chance would have been that more of that share comes to India because South Korea is no longer in the same basket. But that's not happened. That's something to take note of. In fact, MSCI has threatened to even downgrade Indonesia because of certain structural issues out there. It hasn't done it, but it's threatened to downgrade Indonesia to a frontier market from an emerging market. So that's something important to take note of. Now let's talk about our market action. Yesterday, finally, we had a down day. There was profit taking coming in. It started with the tech sell-off in the morning. It just kept accentuating. Metals were also weak. So basically, global-facing parts of the market were weak, and the market took a very decisive defensive turn, the way pharma and healthcare were rallying yesterday. Now, whether that's a one-day phenomena, whether that continues for a while, we'll have to wait and watch. But my sense is that the market now that we don't have earnings, now that we're not looking at the war, oil prices are behaving themselves, the market will take a very close look at what's happening in US and what the mothership is doing, what the mother market is doing. So I think this global inflation data, or rather the US inflation data, is going to be quite critical to watch as we go along. Of course, block trade action continues big time here in the Indian market, and we'll keep tracking that as we go forward. But yes, it's very clear that the 100-day moving average has become a bit of a headwind for the market, at least in the near term. With that, let's welcome our guests. We have Gaurang Shah, as always, joining in on the fundamentals, and we have Jatin Gedia joining in on the technicals this morning. Gentlemen, good morning. Great to have you both back with us this Wednesday. Jatin, let me open with you. Technicals first, because yesterday, finally, the technicals came into play, right? The market needed a reason. It was rallying non-stop for the last 7-8 sessions, so it sold off. But is it a worrying sell-off? What about levels now on the index?
Yeah, good morning, everyone. So, first and foremost, no signs of worry as of now. In the month of June, we have seen around 1100 points rally in the case of Nifty, and thereafter now the Nifty has entered into a pullback phase. Now the pullback phase can extend towards 23,750 on the downside, and thereafter 23,623. So these levels are the crucial Fibonacci retracement levels of the previous 1100 point rally. Also, we have a gap area that was formed on the 15th of June, that is in the range of 23,750 and 23,620. So again, that would act as a support. So my sense is that we are in wave 2 of the corrective phase, and thereafter we should start a next leg of the up move. So I would look at signs of trend reversal at 23,750 and 23,620 zone.
23,650 and 23,720, you said. Around that space.
23,750 and 23,620 is the very crucial support zone. If that is breached, then we would see lower levels. But my sense is that we would take support over there and resume the up move.
Okay, so till that zone is held, you're not too worried. Got that, Jatin. Thanks for that quick opening call. Gaurang, good morning. Technology suddenly is the newest problem for the market. Oil is out. Now technology is the new monster in the room. But again, same question to you. Do you think this is just a 1-2 day knee-jerk phenomena? And we know that US markets are also trading at elevated levels. So just nervousness? Or would you ascribe anything more to it than that?
Hi, Surabhi. Morning to you. Thank you so much for having me on your show this morning. Good morning to all the viewers of your channel. Small disclosure, all recommendations that I'll be sharing with you this morning should be the part of our fundamental research team recommendation from a long-term point of view. Our company, Geopolitical, or myself, we don't have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interests. So, Surabhi, there is a good old saying, they all went up, then they all fall down, right? Valuations becoming expensive at an elevated level, or more importantly, frothy. You are going to see these kind of reactions, not only what we saw yesterday or day before yesterday, or what we witnessed today, but going into the future. And the primary reason for that should be is the ever evolving technology changes in terms of upgradation, modernization, and introduction of newer tools, platforms, and products. This is what exactly I was saying, Surabhi, earlier when we were discussing the entire IT pack. That gone are those days when you used to get, that golden period of IT 5, 10 years back or maybe more, the kind of returns that IT sector used to generate if you eventually decide and invest in it. Now it's going to be an evolution. It is going to be very stock specific. It is going to be putting your investments under the microscope when it comes to IT sector and identifying investment opportunities and finding companies which are going to be relevant and which can mold themselves into this ever-changing environment. I also read a report yesterday or day before yesterday that a lot of top management of some of these so-called extensive valuation or frothy valuation companies putting in the resignation. There have been mass layoffs also. We've read that in the report as well. And more importantly, the evolution of the next product when it comes to chips, semiconductor, PCBs, etc. So whenever your valuations are going to reach a particular level, there's going to be profit booking. There's going to be a sell-off, which is going to be very, very sharp. And it's going to be very, very difficult for specifically traders to escape. Unfortunately, of course, what happens in US happens around the world. That's the order of the day, right? So we saw sell-off in Nasdaq yesterday. We saw the South Korean market correct, hitting lower circuit, led by tech sell-off. In our market also, since morning yesterday, we saw a sell-off. So it's going to be very, very challenging. But at the same time, Surabhi, let us understand one thing. It is going to be equally relevant for IT companies to support launches of newer products, platforms, and tools. We, as a brokerage house, Geopolitical Investments, still remains positive on some select names as far as small cap, mid cap, and large cap IT is concerned. But I would again repeat, gone are those golden period of IT sector to give you that kind of return. And along with that, you need to be very, very choosy. And along with that, the last important point, Surabhi, is going to be at least 1.5, 2 year plus kind of time horizon.
Okay. Gaurang, got that point. So we have to, really see what's going on out there. By the way, we'll talk about technology in more detail in just a bit. JP Morgan today has downgraded a whole bunch of Indian IT stocks. They've always been quite cautious in the recent past. Now they've, come down with some lower price targets. So we will get to it in just a bit. Jatin, just again to talk about the texture of yesterday's fall, decline in tech, more importantly, decline in metals. What are you making of this? Because metals otherwise have been going very, very strong for the better part of this year. What is the metals index telling you and some of these large cap metal stocks that were falling a lot? And in general, what's your word of advice? Should people be closing out their long positions if they have? Or should they be buying this dip in metals? What would you do?
Yeah, see, in the case of metal index alone has provided 18% returns year to date. So that has been the top performing sector for this first 6 months. Now, we believe that there is a scope for some consolidation or a cool off that can happen. In terms of levels for the CNX metal index, we believe that there could be a decline towards 12,300, 12,400 on the downside, where we have a support zone kicking in. Yes, there could be some amount of selling pressure in select names. I can think of one name, that is JSW Steel. There we have seen a breakdown in yesterday's trading session from a sideways consolidation. Aluminium prices have been declining. So Hindalco and Nalco are taking a beat. So overall, I believe that this is still a consolidation phase or a pullback that we are seeing. There are no real signs of a major down move that we are expecting. Only a consolidation phase that can extend towards 12,300 on the CNX or the Nifty Metal Index.
Okay, got that. So that's the point on metals. Gaurang, you want to chime in on this? Metal stocks in general, what's the house call? Not from a short-term trade perspective, but even like a medium-term investment. Because people will be wondering, those who are sitting on gains on these stocks would be wondering whether this is the time to kind of get out, what to do.
So we look, this resolution of useless and senseless bloodshed and destruction that happened in Middle East did create a lot of concern in terms of capabilities and capacities. We heard some of the facilities were damaged and some of them were damaged to an extent that it's going to take a long time to get them up and running. And on the back of that, we saw a couple of prices, specifically with respect to copper, aluminum, and zinc, move up much faster than the other metals. So we have selective investment ideas in the metal universe. And we are also of the opinion, Surbhi, that infrastructure creation is going to keep the consumption of metals and cement at an elevated level. Because without these two commodities, you can't create a durable and a strong infrastructure. Along with that, you have a little bit of positive tailwinds in the real estate sector, which is also doing quite well. So we have investment ideas both in terms of ferrous and non-ferrous. Tata Steel and JSW Steel are the two from the steel pack. And then we have positive coverage on Vedanta, Hindalco, Nalco, and Hindustan Zinc. But again, you need to have at least 2-year plus kind of time horizon. Given the reaction of metal pack to the commodity market prices and the news flows that comes in from the international market, specifically with China. But we remain positive. And we are also of an opinion that as we go into the future, Surabhi, consumption of metal is going to go up and there is a possibility of a little bit of northward movement of flat and long product prices.
Okay. So you remain optimistic, but anyone who's buying into metal stocks right now needs to have at least a 2-year horizon. So keep that in mind, and not a short-term recommendation. Okay, now gentlemen, I want to focus on IT, and for that, let's do one thing. Let's just pull up the call that JP Morgan has given this morning on IT stocks. So here is what JP Morgan is saying. They're saying that Indian IT faces a challenging demand environment amidst the Gen AI disruption as well as the geopolitical uncertainty. Okay, we can see it more clearly now. What JP Morgan is also noting is that enterprise IT budgets are being diverted towards AI and cloud spending. Now, these are budgets that would have come in the short term to Indian IT service companies, but they are being diverted now. And of course, they're acknowledging that the growth is stuck. That we all know, it's stuck between 2 to 3%. And they're saying that AI-led deflation is still in its early stages with further headwinds expected. So they're saying this, dark tunnel is fairly a long one. They're saying that reverse DCF analysis leads to 10 to 25% target PE multiple cuts across the sector. I mean, that's a pretty telling statement. That's their analysis. They're saying that 10 to 25% PE cuts across the board, and they have started downgrading some of the stocks. So HCL Tech downgraded to an underweight from neutral, Wipro downgraded to an underweight from neutral, Tata Technologies has been downgraded to an underweight as well. So these are some of the ones that they are downgrading. Their top picks are TCS Infosys, Tech Mahindra, Coforge, Persistent, and Sagility. So they still have some top picks, but then the other stocks are downgrading in a big fashion. So let's see if this weighs on the overall sentiment this morning or not. Gaurang, come in on IT. What is your own reasoning? Is there more downside? And are you buying anything in this carnage in IT for the long term?
So Surabhi, look, is this the end of the dark tunnel, as you rightly said? I don't think so. Because, remember one thing, Surabhi, IT is a sector which is forever evolving. And there are a lot of new products respect to change in technology, etc., etc., etc. As and when these products come and get launched, the IT sector will react to it, depending upon which way the wind is blowing. Having said that, I'll name two names from small cap, mid cap, and large cap universe for the benefit of you viewers. But again, please keep in mind, you will not get the kind of return that you were getting years back, and you need to have a longish time horizon. Having said that, KPIT Tech and Science Limited are, I will start from the bottom of the pyramid, that is a small cap. So Science Limited and KPIT Tech. In the mid cap universe, Coforge and Persistent Systems. In the large cap universe, possibly something like an HCL Tech and TCS. Though we have other coverages as well, but too much is also not good for health. So these are some 6 names in the small and large cap IT universe that we remain positive. And don't go all out. Start at current levels and stagger your investments. When you get a dip of 5% or more, add to your investments.
Fair point. So it's really not something for the faint-hearted, and only if you can stomach the volatility, only if you can be in it for the long term. That's the call. Jatin, you want to add anything? The kind of sell-off that we've again started seeing. I mean, the large cap names are already down 20-30%. But then, we know that sometimes these things can surprise even more on the downside. Any trades in IT, up or down?
Yeah, see, in the case of Nifty IT, we did turn positive during the initial first week of June. However, the pattern that we were expecting to develop has been negated. So now on the downside, the crucial levels that we are expecting is 26,200 on the Nifty IT and thereafter 26,000. So 26,000, 26,200 is a decent 3 to 4% downside even from current levels. From a stock specific perspective, going short at current levels, they are extremely oversold. So the risk of a gap up opening is always there when we are oversold. So I would not suggest to venture into long or short at this point of time. My suggestion would be to avoid at this point of time.
Okay, all right, got that. Let's do one thing. Let's quickly run through some of the stocks in news today. And by the way, morning to everybody who's joining us on our YouTube telecast. And I can see some questions already coming through. So we're going to, after the stocks in news, we're going to try and answer a couple of viewer queries as well. Let's quickly run through today's list then. So we're starting off with the NLC India. The company has signed a memorandum of understanding with IOC, Indian Oil Corporation, for development of a renewable energy project. It could be a bunch of different projects. That's what they're saying. Okay, we should not have the FII numbers there, maybe some error over there. But the stock in news is going to be NLC India. Yes Bank is the next one on the radar. The company is holding a board meeting on the 29th of June. They're looking at fundraising, and the options could include both equity as well as debt. So Yes Bank is going to be in the spotlight as well. IRFC, the government has been selling a lot of equity in the market of late through these, offer for sale, offerings that we've had, and IRFC becomes one more added to that list. So it's not selling too much, just about 1% equity is being sold. Then there is a green shoe option of another 1%, so total maybe could be 2%. This kicks off on the 24th of June, which is today. This is for non-retail investors, and retail investors will get to bid tomorrow, which is the 25th. Coming to City Union Bank, City Union Bank is holding its AGM on the 14th of August, and they're looking to raise 5,500 crore rupees, and it's the equity route that they're talking about. So they're looking at doing a QIP, Qualified Institutional Placement, and this is going to be in focus as the fundraising gets underway. Finally, a small cap stock on our radar as well, Rashi Peripherals. It's looking to acquire a company, looking to take a strategic stake in VDA Info Solutions, and it's the total valuation is 550 crores. We'll get you more on this as we go along, but those are some of the names in news this morning. Gaurang, I just wanted to talk to you about financials. So of course today's newsmaker is Yes Bank because it's looking to raise some money. But in general, what sense have you made of the lackluster trading last 2-3 sessions that we've seen on financial stocks? Because the leadership that banks were providing in this rebound, now it's kind of fizzling out a little bit. But again, if you were to buy large cap financials, then would you go with some of the big top dollar NBFC names or bank names? I mean, give us 2-3 ideas on the financial side.
Surabhi, I would take a little bit of more liberty, if you will. First of all, the entire BFSI segment looks very, very strong. And I have also maintained one advice, Sulbi, that if you are investing in stock market and if you do have a portfolio, my sense is, and this is my personal opinion, that BFSI segment has to be a core in your portfolio. At least 15-20% of your portfolio should be allocated towards BFSI segment. Having said that, keep best of all the three. Select private sector banks, select public sector banks, and strong NBFCs. So here again, like IT, I'll give out two names for the benefit of your viewers. From the NBFC pack, Shriram Finance and Bajaj Finance. From the public sector bank universe, State Bank of India and Bank of Baroda. From the private sector bank, if I have to pick one large cap and one small to mid cap, then it will be ICICI Bank and Federal Bank.
Okay. All right. So those are some financial names. And with that, let's quickly address some of our viewers' queries. So starting off with the first question that I'm getting in from a viewer who identifies himself as Momin Da Vinci, if I got the name correct, asking about the Nifty. We've already had a view from Jatin on this. He's saying that as long as the Nifty is above 23,620 to 750, no need to worry. So watch for that zone. But we'll go back and revisit and take the Nifty call a little closer to market opening. Stay tuned for that. Then there's a question coming in from Mantra Patel on JP Power. He's saying he bought JP Power at the price of 19 rupees, but it's falling steeply. But, you know, it's that kind of a stock. Not quite sure if any of our guests have coverage on JP Power. Jatin, have you had a look at the stock recently?
Yeah, so technically it's a weak structure. It went up to 24 or 24.50 on the upside, but thereafter it has been consistently falling. The viewer has bought it around 19, so I would suggest to keep a stop loss of 17 rupees, and if 17 is breached on the downside, exit is the recommendation.
Okay. Now, this is a company under transition, ownership transition, dealing with legacy issues, debt and all of that. So it's a complex thing. I'm not sure, Gaurang, if you've had the chance to look at it or see how it's progressing. Any thoughts on JP Power?
Surabhi, I would rather invest my time and money into better companies, to be very honest. I would not even touch the balance sheet of a particular company, with all due respect.
Fair, absolutely. I mean, that's a word of caution going out to people who are listening right now. That if you're looking at fundamentals, then Gaurang is definitely not convinced on this one. Technicals, you've got the levels from Jatin. Okay, very quickly, I have a couple of short-term queries coming in. So Jatin, this one's for you. ITC, our viewer Pankaj has bought 2,000 shares of ITC for the short term. He's bought just yesterday. He's saying please guide. So maybe some levels on ITC will help.
Yeah, so you should continue to hold with a trailing stop loss at 284. On the upside, I'm expecting levels of 300 to 304 on the upside. So hold your position as of now.
All right, that's ITC. There's another viewer talking about metal stocks. We just discussed metals at the start of the show. This is a viewer that goes by the handle CKSAT. He's saying I can add either Vedanta or Hindustan Zinc. Both I've bought at much lower prices. So for the next 1 year, which would be better? We already know Gaurang likes Vedanta. It's one of the stocks that he recommended in the metals pack. But his holding horizon was 2 years, mind you. But anyway, Jatin, come in on this. Hindustan Zinc or Vedanta, what's a better buy now?
See, I would say that Vedanta is a better buy wholly on the basis of the price structure that we are seeing. See, Hindustan Zinc has been stuck in this 720 to 680 to 520 range, but Vedanta has seen only a recent downfall. So technically, Vedanta is a better buy, or if he wants to add, then Vedanta is a better choice between the two. In terms of levels, I am expecting 329 to 335. The short-term stop loss should be placed at 265.
Okay, all right. I'll try and squeeze in 1 or 2 questions on the fundamentals as well, the investment questions. There's a viewer, Vishal Dave, who's saying, hi Vishal, morning. He's saying that, what's the view on Ola Electric? and Vikram Solar for the long term, looking at a 2-year investment. This is interesting. And Ola Electric has been in news. Yesterday, Gaurang, I don't know if you saw the update or not, their battery has received the BIS certification. So the stock was a little excited yesterday because it's moving along, and that was Ola's promise all along, right? That once we get our batteries made in-house, then our profitability will improve. What do you think of this one?
So I'm waiting for that day, Surabhi, when the profits will improve. Not to forget, the color is deep red on the balance sheet. And there are a huge number of customer complaints with respect to their product, and there's a lot of cases in the consumer court as well. Along with that, and again, as a candid disclosure on Vikram Solar and Ola Electric, if I'm not mistaken, and I stand to be corrected, we had subscribed during the IPO. So Vikram Solar, if you are a long-term investor, possibly, I'm hoping that that IPO notice on the subscribe side. But Ola Electric should be, first of all, no specific comments. We don't have a standalone fundamental report. If you ask me, are there better alternative investment ideas? Lots of them amongst the established players. Bajaj Auto, TVS Motors, Hero MotoCorp, Eicher Motors because of the Royal Enfield motorcycle, and they very recently launched an EV variant of that. And if you want to play a pure EV play in commercial vehicle, and the reason why I'm quite positive about this company, Electra Green Tech, Surabhi, is the fact that the Honorable Minister did mention a couple of weeks back that state transport utilities are going to replace the aging buses. And along with that, there are going to be a huge number of trucks which are going to get replaced. All this will come into positive traction for companies like Electra Green Tech because of the technology.
Okay. So Electra could be an interesting alternative if you're looking at the renewable space. Today, a lot of people are asking for long-term investment questions, actually, so that's good to know. I'll give you 2 more stocks, Gaurang, in case you've seen them, if you could help out the viewers. Alex is saying, can you get a long-term view on CAMS? He's looking at a medium to long-term investment. Another viewer is asking about EMS, the company that's into wastewater management. I think it's an engineering company. And the stock has started rising. This EMS is a mid-cap stock. Last 2-3 weeks, I think it's just suddenly taken off. So EMS or CAMS. And then there is Dilip, who is asking about a take on IRCON. IRFC is in news anyway because the government is doing an OFS. And then there is IRCON. These days, we're getting a lot of queries again on the railway stocks, Gaurang. It seems people are missing them or remembering them. So just in case you've had a look at any of these companies, any of these stocks, EMS, IRCON or CAMS, if any of them qualify for an investment according to you.
So again, I'll restrict my comments to CAMS and EMS sector, not the EMS company.
Okay.
We have a positive coverage and we are extremely positive about the Indian capital markets. And so you and me and all of us need to be positive on the Indian capital markets. We are very closely associated with that. So our view is that the Indian markets are possibly, once the dust settle down, will give you anywhere between 12 to 15% annual run rate. I'm talking about Sensex and Nifty. And if you compound that for the next 3 to 5 years, you can very well have the number in terms of where the Sensex and Nifty and the markets can go. Having said that, services provider, computer age management services, we do have a positive coverage as a disclosure. Along with that, this is not a recommendation, just a reference. All strong entities which are associated with stock market. Now, whether they are platform providers like BSC or MCX for commodity or a new kid on the block, NSE IPO, they'll do well. Then you have asset management companies because they are also closely related with the stock market. So we are positive on HDFC, MC and Nippon India. And lastly, the intermediaries. They will also do well, strong companies. And of course, other service providers, depository service providers like NSDL, CDSL. So these are just references, but positive coverage on CAMS, HDFC, MC and India and Nippon. Water treatment related company, we have one coverage, which is I think a small to mid-cap company, if I'm not mistaken. And that company is VATech Vabag or Vatek Vabag. It depends how you want to pronounce it. This company has got huge order book. a very well experienced company, and the stock has done wonders over the last 1 month. They are very good at desalination, water treatment, effluent treatment, recycling water. So if one investment idea you want, and Surabhi, late arrival of monsoon has actually given a wake-up call to a lot of state governments in terms of recycling and reuse of water. So water treatment, water treated usage. So I believe these kind of companies, even Thermax as a matter of fact, features in our positive coverage.
Okay, all right. So plenty of ideas there coming in for the long term that viewers can perhaps consider. Now, gentlemen, let's quickly take stock of the pre-open session. Now that things have settled down, it's going to be a quiet start. That's what the indication is. 28 points lower on the Nifty. So let's get the rates up on the screen. The Sensex is actually showing a very mild green tick. Nifty is down about 28 points. That's what we have. The mid-cap index is absolutely flat. And the Bank Nifty, well, that's about 0.2% lower right now. So it's very, very quiet. Let's fire up the Nifty losers then and see where the pressure points could be. So Wipro, I can see down. HCL Tech, I can see down. These stocks, remember, JP Morgan has downgraded in their IT call that's come through this morning. Some of them are lower. Hindalco again is lower. This is a very similar looking starting screen that we had yesterday as well. Eicher Motors is slightly down, about 0.7%. I can see Axis Bank, Bharti Airtel. These are some of the early losers if you go by the pre-open session. Reliance could be a little sluggish at the start. That seems to be the indication. On the upside, there is Cipla, Infosys, Adani Enterprises. Those are some of the stocks on the upside. Actually, I mean, healthcare has been the strongest space, not just in the last couple of days, but even mostly this year. Stocks like Apollo Hospital have done very, very well. We'll fire up some of the other stocks on our list in just a bit. IRFC should perhaps come up for you. We'll see how that opens up. That's a stock in news because of the government OFS that's going to be taking place. And the pre-open is down about 4% right now, just in anticipation of the additional supply that's going to come through. Okay, so let's take final recommendations with Jatin as well. Jatin, what is your read-through looking at the pre-open screen? Just revisit the Nifty call and today's top trades as well.
Yeah, so on the Nifty, this gap, mild negative opening that we are having, I would be a buyer into this with around 23,750 on the downside with a stop loss placed at 23,620, and on the upside I'm expecting 23,900 to 24,000. So that would be a buy recommendation in the case of Nifty. For stock specifics, I will go with one long idea and one short idea. The long idea will be on PNB Housing Finance. So technically it has broken out from a bullish flag pattern yesterday. Despite the fall, it managed to close on a positive note. We are expecting levels of 1080 in the case of PNB Housing Finance. Stop loss should be placed at 1000. The sell side recommendation is from the metal pack JSW Steel. It has broken down from a sideways consolidation. I'm expecting levels of 1200 in the case of JSW Steel. Stop loss should be placed at 1270.
Okay. All right, gentlemen, thank you very much for being with us and taking us through the market pre-open session and giving us lots of trading ideas as well. Have a fantastic Wednesday and we'll see you again soon. Thank you.
Thank you.
Okay, we're off to the start now and let's see how it's going to be. Quiet as the index was indicating in the pre-open session, 20 points lower on the Nifty. You can see there. Sensex is totally flat. Bank Nifty absolutely flat. There's hardly a 0.1, 0.2% change on all of these indices, including the mid-cap index, down 20, 30 points. So index level, there's not much movement. I think the market's just digesting all the gains, yesterday's fall, and just kind of, it's a very slow start, and then things evolve as the day progresses. We don't have a major up or down move at the opening. It's the second day in a row. Okay, let's take a look at individual stocks then, because the index is not telling us anything. At the individual stock level, if we talk about the losers, then Bajaj Auto, Hindalco, HCL Tech, Bharti Airtel, Eicher Motors, Grasim, these are the losers. They'll come up for you on the screen. So again, it's not really, there's no big trend that I can pick out, at least so early on. But yes, metal stocks are continuing to be a little weak. That's something that we saw yesterday as well. So Hindalco is down. I saw Tata Steel open lower as well. So watch for these names. There's JSW Steel, which is also lower. So metals continue their weakness from yesterday. Bharti Airtel is down 1.2%. That's a decent fall for early in the morning. Then, of course, some of these names that JP Morgan is downgraded, they are weak. HCL Tech is down about 1% as we speak. Reliance is seeing some profit taking, 3-4 rupees down on Reliance as well. Now let's look at the upside of the screen. We are actually seeing some buying in IT, which is quite interesting. JPM has continued with its overweight call on Tech Mahindra and Infosys. Both those stocks are up between 1.5% to 2.5%, as you can see. Adani Enterprises, which has been sort of one of the top performers of the year, that continues its good form, 1.5% up on that stock. ICICI Bank, Trent, Power Grid, Cipla. These are some of the other names on the upside. TCS is also managing about a 0.5% gain, at least for the time being. So these are the trends. It's very, very mixed out there, and not getting too much of follow through on the way up or on the way down. Bank Nifty has turned around, so that's the good news. Let's pull up some banking names and see what's going on. I can see Kotak Mahindra Bank on the upside. ICICI Bank is 1% higher. What else do we have? HDFC Bank is very flat at this point. State Bank of India is up about 0.5%. Kotak is flattened out now. But ICICI Bank and SBI, they are responsible for the overall Bank Nifty looking better off right now. And HDFC Bank, for what it's worth, at least is not falling. It's up by about a rupee and a half. But these are the stronger ones, ICICI Bank and State Bank of India at this juncture. That's the large cap screen. Now let's turn our attention to some of the newsmakers and some of the mid caps as well. So let's start with IRFC. Should fire up IRFC straight away because of this OFS that's happening. Government looking to sell up to 2%. So they're selling 1% in the OFS. There's a green shoe option of another 1%. Because of that concern, the stock's already down about 5% as we speak. Rashi Peripherals announced a small acquisition. That stock's up about 4-5%. Then we don't have too many newsmakers actually this morning. So let me look at what else is happening on the volumes chart. So that's Rashi because of acquisition that they've done. Okay, in terms of top volume movers, what do we have here? Some gains on Yes Bank, which is looking to raise some money. That stock's up about 1.5%. L&T Finance is seeing some traction. There's some buying on Granules India, some buying on Restaurant Brand Asia, RBL Bank. I'm struggling to really find meaningful winners in the mid-cap universe right now. It's very, very quiet out there. Some of the IT names, mid-cap IT names are recovering from yesterday's blows. Coforge, Memphis, we can see these stocks are on the upside, at least for the time being. Let's see what's happening in terms of overall gainers. Anything else that we're missing out? Not really. There's Piramal Pharma, which is up about 3.5%. Pace, Digitech, 3.5%. It's very, very quiet out there. Nothing that's really, having a dramatic move early in the morning that's like really catching the eye. It's just very measured, quiet, very steady as we open out this morning. That's the opening that we have, at least for the time being. Good time then to look away from the screen, let the screen do its own thing, and think about the overall nature of this market as it has gone through a period of recovery in the last few weeks. And we have a special guest joining us this morning, Harsha Upadhyay, Chief Investment Officer at Kotak Mahindra AMC, with us with his thoughts. Harsha, great to welcome you back on Money Control. I think we last spoke, I was looking at my notes, and we last spoke when the war had broken out, when everything was very confusing, when those bombs and missiles were still flying. But today we speak again at the end of June in a much better environment. So welcome back to the conversation, first of all.
Thank you, Surbi. Good morning to you and your viewers.
So Harsha, I must, say it out there that you, and that's how you've always been, you were sounding fairly sanguine even when we spoke in early April. And at that point, you told me that you're not looking to make too many changes to the portfolio. You were still positive on financials when the market was questioning whether, oh my God, there'll be big credit quality issues because small caps and, SMEs will suffer. But you had held your ground. So let me start right there. Now that this war perhaps is finally in its final chapters, maybe it's dying down, What do you make of the recovery of the market, the valuations? Just how are you feeling about things overall?
So be clearly the major overhang that was there for the market was the West Asia war, and that seems to have ended. We hope that the ceasefire that has been signed will hold, and it will be a permanent ceasefire. So accordingly, the crisis that was there in the energy market has also has got blown away, which is good news, especially for India, since we import so much of oil and gas. So from an inflation perspective, I think things will cool off from here. There are no structural issues that India has to face at this point of time. But of course, everything is not great. The monsoon seems to be a little bit of a question mark at this point of time. The earnings season, as expected, will be weak in Q1. We hope to see a recovery from Q2 onwards. Most likely that has already been discounted in terms of the prices. However, there are no fresh positives or triggers for market to take an upward direction. And that's where it is. I think it is still consolidating in a narrow range at this point of time.
That's a very important point you just made, Harsha, that the earnings recovery, which we're expecting Q2 onwards, that's already discounted in the prices. So you're not sounding extremely bombastic and extremely gung-ho to me right now. You're sounding very measured. Just expand on that view.
That's right, Surabhi. If you look at earnings expectations before the start of the war, we were looking at probably 15 to 16% growth at the mainline index level and maybe slightly higher for mid caps as a basket. That would probably go towards 12%, 13% for large caps and maybe slightly higher for mid caps at this point of time, assuming that Q1 is going to be weaker than what was anticipated earlier. So in that sense, it's not a big impact on earnings. However, there is no fresh positive trigger from an earnings perspective. As far as the valuations go, large caps are trading at a valuation which is at a discount to 10-year averages. So clearly, there is no valuation froth in large caps. And if you are investing now, even if there is some hiccup in earnings for whatever reason, I think those are all well captured in the current valuations. You should broadly get something like an earnings growth CAGR if you are a 3 to 5 year kind of an investor there, assuming no re-rating from these levels. For mid caps, of course, the valuations are also slightly higher than long-term average. But this is the first time probably we have seen in the past 5 to 6 years post-COVID where valuations have come closer to 10-year averages. So to that extent, the froth in mid cap at the index level is also much lower. And of course, earnings growth is expected to be slightly better than that of large caps. So overall, we believe that these two baskets for a long-term investor still make sense. You have to keep a diversified portfolio. Depending on your risk profile, you will tilt towards either large caps or mid caps or a combination of these two. And that's how I think you need to wait through this period of consolidation in the markets.
Okay, so you're expecting a period of consolidation, Harsha. But consolidation is what this market has been in for the last almost 2 years now. I mean, come September, we'll be completing a 2-year consolidation period. You're expecting that to continue?
That's true. But the only change that I would like to highlight here is at the beginning of the market correction or the consolidation, the valuations across the board were very, very high. Whether you look at large caps, mid caps, or small caps, the valuations were very, very high as compared to 10-year averages or even compared to where the earnings were going at that point of time. And that is not the situation any longer, at least in case of large caps and mid caps. So there is no valuation froth. And to that extent, if you are investing today, there is no risk of really seeing a structural derating in those two baskets. Of course, the volatility can continue. But if you're a long-term investor, I don't think you need to worry too much on the valuation front in these two baskets. That's the change that has happened in the 2 years.
That's a very, very interesting assessment of where things are. So I'm just summing it up for viewers' benefit. Harsha's view is very clear that perhaps the risk of failing now, the risk of disappointment if you're investing now is much lower because valuations at least are on our side. But the momentum may not come back in a hurry. And Harsha, that's my next question really. What will get the momentum back? And this at a time when domestic mutual funds are still getting very, very decent flows. So what can reverse the tide? FPI buying?
Yes, FPI buying will be one of those parameters that everybody is looking at. If that changes, then there can be serious changes in terms of sentiment. And if there is more than expected recovery in earnings from Q2 onwards, that could also be a trigger. So I would say right now, market is looking for positive triggers, but unfortunately, while the war has ended, there is nothing really that's exciting the markets. And of course, we have had this issue of late start to the monsoon, which is also leading to some question marks in certain segments of the market in terms of earnings growth in the near term. So I think that's where the market is.
And Harsha, now the tougher question. What is the probability of either of these two scenarios playing out? The probability of FPIs coming back, and more importantly, the probability of earnings may be surprising on the upside? Or is there like a zero probability of both?
As of now, I would say probability of earnings surprising in the near term is a lot lesser than FPIs probably coming back because we have seen almost 18 to 20 months of continuous selling from FPIs. At some point, they would start looking at India. And of course, when you stack up India versus the rest of the emerging markets, valuations are no longer as expensive as it was in 2024 or even 2025. The earnings growth trajectory, which was decelerating for us and probably accelerating for some of the other markets, has also kind of normalized a bit. So overall, I don't think the FPIs will be as negative as they were in the year 2025 on India at this point of time. When they will turn, of course, there's no prediction that one can make. But between the two, probably we will see some inflows from FPIs in the next few quarters. And maybe that will precede the earnings recovery that we are all expecting.
Okay, Harsha, now that we've understood the overall backdrop and how you're expecting the market to behave, let's come down to what still excites you, from a medium-term investment perspective. You said that now mid-cap valuations are looking a little better. So let's start in that zone first. Within mid-caps, which are pockets which seem to be offering a reasonable amount of growth ahead that you like?
See, as always, mid-caps need to be seen more from a bottom-up perspective, not so much from a sectoral perspective. Clearly, there are pockets like industrials, defense manufacturers, defense equipment manufacturers, some of the power ancillaries, renewables, even some of the NBFCs and the mid-sized banks are trading at a valuation which is reasonable, I would say, given the earnings growth trends that we are expecting in these segments. And if you keep a slightly diversified portfolio within mid-caps, that would be a good strategy because it's not that you are seeing a very strong relative valuation trends in any of the sectors. More or less, most of the sectors have participated in the rally in the past several years. So the key would be to look at more reasonableness in terms of valuations and also where sustainability of that earnings growth continues. And some of the segments that I mentioned are offering better visibility on the earnings growth. I think that's where one should be.
On defense, Harsha, I mean, in a year that has been tough, the Nifty India Defense Index, and I'm just using the index as a sort of a barometer, the index itself is up 24% this year, calendar year 26. It's sitting at a 52-week high. So what is your word of advice to people who now want to go in and buy defense stocks? Are valuations still reasonable, or do you run the risk of getting burnt if you buy now?
So if you look at very short term, there could be volatility in this segment. As you rightly pointed out, the valuations are at higher levels. So to that extent, even if there is a small disappointment or a sentiment change, you could see prices correcting. However, if you are looking at 3 to 5 year perspective on defense equipment manufacturers, the order book continues to be very, very strong. Many players have 2.5, 3 years, 3.5 years kind of visibility on their order book. The execution levels across the board, whether it is state-owned defense equipment manufacturers or private manufacturers, the execution levels have really gone up. And also, we are seeing a huge traction in terms of exports. which was never the case for Indian defense manufacturers earlier. We are seeing a lot of orders coming in from other countries as well. So overall, I think this space looks very strong in terms of growth. But of course, there could be volatility in earnings because sometimes the orders may flow in a lumpy manner, or the execution may take place in a lumpy manner. The earnings growth therein could also be lumpy. But nevertheless, I think this is a pocket where one needs to have some investments. I don't know whether one should take aggressive thematic exposure to defense at this point of time. But I think as a part of the diversified portfolio, having overweight stance on defense still makes sense.
Okay, so that's defense. I want to discuss two more sectors, Harsha. The next one has to be this whole cutting edge deep tech play, data centers. Because we have such few, companies in this universe, or maybe at least direct beneficiaries in this universe, stocks tend to go up, in a parabolic fashion. I'll just give an example, for the sake of viewers to sort of understand what I'm saying, that let's say you look at a Kirloskar oil. It received a data center tie-up, or it went into a data center tie-up with a global major. Stock just went up 30-40% in 1 week. So in this universe of deep tech / data center / AI, Harsha, again, how are you navigating this? And, what are the guardrails people should put in place? How are the valuations here? It's all very exciting, but then it depends on at what point you're coming in, right?
Yes, Surabhi, if you look at AI pure plays or deep tech, I think unfortunately in Indian listed space, at least we do not have too many names to play. And that's the reason why some of the companies, whenever they make announcements on these fronts, you see large moves coming in. However, there are several enablers for AI rollout in the country. For example, the entire data center build out, etc., is definitely going to happen. And there will be companies which will be at the forefront of this wave, and they will continue to see much stronger growth as compared to the overall average market growth, I would say. However, one has to really go bottom up and see where the valuations are and what kind of growth and margins are sustainable on a medium-term basis in this business. Because if you're just going by announcements, of course, there is a lot of excitement, but finally you need to look at the financials and see how long does it, is it going to take for those companies to execute some of those orders? What's the kind of margins and profitability that the companies are going to make, and where are the valuations? I think that's where you need to take a call. And the pockets which have been in some sort of frenzy at various points of time have shown in history as well that just a small change in sentiments or any of the growth parameters, expectations can lead to a higher degree of volatility, and that needs to be kept in mind. So I don't think this is a time to take too many thematic aggressive bets. I think the diversified basket of large caps and mid caps offer reasonable growth expectations with a lot lesser risk at this point of time. I think it only takes more patience, which is a difficult thing to practice, right? I mean, most investors want to see performance at every point of time. But if you're a patient investor, I think the valuations in many segments are much better than where they were a couple of years back. And earnings growth will come back because India is a structural growth market and earnings will come back.
And this is after a long time. I'm hearing you sound a little more favorable on mid caps as well, because as a house, I remember, back towards the peak of the 2024 rally, towards the end of 24, I remember Nilesh himself getting very, very cautious and calling it out, saying that please be careful with mid cap. So this is quite interesting that now you seem to have a more favorable bent of mind with respect to what's happening in the mid cap market. Harsha, now coming to the big IPOs. It's mega IPO time for this market again. Both Geo and NSE will roll forward. What do you think of the timing? I mean, given what you said about the market, the mood, the sentiment, the fanfare, at least today, seems to be missing. I don't know, maybe next 2-3 months it comes back. But these are large issues. And what do you think, they will herald for the market?
Surabhi, as always, I would not like to comment on some of these individual names. But of course, I think the equity market is still strong. It may not be at its best, but I think the good IPOs, good QIPs, etc., are getting sold at reasonable valuations even today. So to that extent, I think there is space for IPOs at reasonable valuations. It all depends on what valuation some of the IPOs line up going forward, and what the overall expectations on those businesses, etc. But I don't think just because we have seen very few IPOs in the last couple of months, it doesn't mean that the entire IPO lineup is dry and nothing is likely to happen in that space. There is reasonable interest, as you would see, even from foreigners, for example. While there have been sellers in most of the names that they were holding in the past, they have added to some of the newer companies which got listed in the last couple of years. So both domestic investors and foreign investors have been open to some of the new businesses, as long as those businesses have a clear growth path and a reasonable valuation attached to them. I think that will continue irrespective of the market sentiments. But of course, if market sentiments are better, then it will be easier for some of the large IPOs to sail through.
But you wouldn't be worried, because typically, if you look at history, then very large IPOs end up signaling a little bit of a top. Maybe not for the market, but maybe the sector. So, for instance, the capital market sector, which has had a huge run, do you think it's still good for more?
That's a good point that you raised, Surbhi. I mean, usually this happens at the peak of the markets. If valuations are also expensive, if market has already seen a couple of years of good performance, and then there is a large IPO that comes at a very high valuation, and it doesn't get supported by earnings growth in the near term after the listing, then what you said usually pans out. But in this case, at least for the last 2 years, as we discussed earlier in the show as well, markets have been quite sideways and have consolidated. So there could be pockets of overvaluation in various segments, but I don't think market as a whole has seen so much of overvaluation or fraud. So to that extent, what we saw in some of the earlier episodes may not entirely pan out, because in those cases, the valuations and the short-term recent performance at that time also a reason for markets to kind of go into a correction later on.
Okay. So, Harsha, coming to closing thoughts then, what would you tell investors who've been keeping the patience? I mean, May we saw a little bit of a dip in the mutual fund flows, equity flows, but by and large, investors have been keeping the patience. What is the guidance or advice to them for at least the next couple of months as this market rolls on, and as you're expecting this range-bound period and this consolidation period will roll on as well?
Frankly, it's very difficult to predict how the markets would behave in the very short term in the next couple of months. But I would say probably it's going to consolidate at around current levels for the next couple of months. So for any investor who is building equity allocation, probably these are the good times. But at the same time, there is no need to make large, aggressive lump sum investments. One can continue to have disciplined investments coming into equity markets at various valuation levels. And if it's a consolidating market at a valuation which is closer to or lower than 10-year average, then of course your average price of equity allocation is also unlikely to be very high. So that's where there is comfort, at least on entry valuations. And of course, if you hold it for 3-5 years, in the long term, usually good portfolios generate a reasonable level of returns, and that's the expectation.
Okay, so stay patient, stay the course, and stick with large and mid caps. I guess that's Harsha's advice to us this monsoon June morning, where at least the monsoons are here in Mumbai, and hopefully they'll make up for the deficit that we've seen. Great conversation as always, Harsha. Thank you so much for taking out the time, and we look forward to the next one already. Thank you.
Thank you, Surbhi. Have a good day.
You too. Have a nice one. Okay, well, with that, let's take a look at what's going on with the screen. So the Nifty has managed to see a buy the dip sort of a trajectory. You can see that the opening was lower, but then the buyers came in. So it's not a sort of a roaring rally or anything, but 60 points up. So it's not bad. Let's see where the buying is coming in. Banks, look at the Bank Nifty. The Bank Nifty is up 0.6%. So banks are the ones that are leading this recovery. Mid-cap is still kind of flat, not too much traction. But yeah, the banking index is looking very good. Let's fire up the Nifty winners. So I can see once again some healthcare and pharma stocks. and some financials as well. Dr. Reddy's is doing very well this morning, up almost 3%. ICICI Bank, like I said, the banks are better off. And then Tech Mahindra, I think this JPM call reiterating an overweight on Tech Mahindra. That's helping this stock, and it's also helping Infosys, by the way. Infosys is the other counter, Infosys, TCS and Tech Mahindra, that JPM still likes, though they're very, very cautious on the IT sector. Some of the other gainers are there up for you on the screen: Interglobe Aviation, Apollo Hospitals, Trent, Adani Enterprises, L&T. It's a decent mix actually for the market. So you've got L&T, then you've got some of the financial names like HDFC Bank and ICICI Bank that are looking good, and quite a few pharma names that continue to see buying. So decent trends on the way up. On the way down, just keep an eye out on metal stocks because most of the metal names are still weak. Whether it's Hindalco, whether it's JSW Steel, Tata Steel, most of these stocks are still nursing some losses. So that's how it's playing out, at least for now. Mid-cap index a little subdued. The advanced decline ratio right now is slightly negative. But as the day progresses, let's see if the sentiment comes back, if the buyers queue back up on the mid-cap side of the screen. Well, that's the opening this morning, and that's where we will take your leave from the entire team that puts this show together. Thank you very much for watching, and we'll leave you with some of the top brokerage calls that are coming in on stocks this morning. Thank you for being with us.